You know, we have great inflation numbers, by the way, just got released. Inflation is way down, and it's based on what we've done, and we've done it in a very short period of time. You know, we had virtually no inflation. For 4 years, we had almost no inflation, and when these characters took over, we went from no inflation to the worst inflation probably in the history of our country.
The stock market is generally considered a forward-looking mechanism, meaning that stock prices reflect investor expectations about future earnings, economic conditions, and company performance, rather than solely focusing on current data. So we know that inflation did cool in February. This could be the last calm reading for a while. This is all from the Wall Street Journal. Economists expect that Trump's tariffs will raise prices on a number of goods in the months ahead. The Trump administration this week imposed 25% tariffs on steel and aluminum imports to the U.S., prompting retaliatory measures from trading partners. The University of Michigan's Consumer Sentiment Report also nosedived 11% to 57.9 from 64.7 last month. Here's the graph right here. Here's what it looks like. So last month we were up here. Now we are down here. Consumer sentiment in the U.S. sank this month as worries intensify over what the tariffs, government layoffs, funding cuts, and immigration restrictions that President Trump has introduced might mean for the economy. Compared with a year earlier, consumer sentiment is down 27%. These reports have been horrific, according to many economists, like Samuel Tomes right here, and he also mentioned that elevated economic policy uncertainty and the sharp drop in stock prices have greatly undermined consumers' confidence. Trump also spooked markets when he sidestepped a question about whether a recession is on the horizon in an interview that aired last Sunday. So there are some warning signs, such as the University of Michigan's Consumer Sentiment Index, that basically says that based on how consumers expect the economy to progress over the next year, that can really help predict future spending. So if consumers aren't feeling confident about what's going on right now, that can greatly help predict future spending, which in turn can lead to business trouble. If consumers pull back, consumer-facing businesses will as well hurt the job market and further weigh on the economy. Inflation expectations for the year jumped to 4.9% from 4.3% last month, which is the highest reading since late 2022. And of course, for the Federal Reserve, that poses a problem because inflation expectations can feed into prices. In other words, if people expect higher inflation, they might go ahead and demand higher wages, and businesses might go ahead and raise prices, which means that higher inflation becomes a self-fulfilling prophecy. So inflation is still a very key issue. Despite what President Trump has said, that inflation cooled off in February, yeah, it did, but he also wasn't imposing tariffs so crazy last month either, and they weren't really in effect. But now they are coming into effect, and they may be here to stay. So we have to watch out for the next inflation readings. Expectations for inflation have jumped, and consumer sentiment has dropped. So what does that mean for the stock market? Well, I don't know. The price is always right. So let's jump into the charts right here. Let's start off with SPY. So SPY today has closed at 562.81. I remember saying right here, 565.16. I thought that this level could potentially hold as a support level. It did not. It blew right past it. And we are also underneath the 50-day moving average just by a little bit. Not very a strong candle close. We made a low of 549.68 this week. It just doesn't really look too good, to be honest. At least to me it doesn't. I'll go ahead and zoom into the daily chart. A few things to note which caught my attention is this trend line right here. We kind of have some sort of triple top / head and shoulders kind of going on a little bit, right? You see that? And then we also have a broadening wedge, aka a volatility range right here. I'll get rid of this trend line so it's a little bit easier to see. So we can see that this trend line right here was being respected with 3 touches, and we are currently retesting it. So the question to me just becomes, is this as high as we bounce? I personally would not think so. The 15-day moving average is all the way up here, so we're pretty underextended. We're pretty low, which means that I think we can see some mean reversion. What that means is stock prices, they usually adjust to their average stock price. They go, trends go up and down. They don't go straight down, and they don't go straight up. And usually when that does happen, you usually see very, very extreme pullbacks or bounces. So if a stock goes straight down, you're going to see an adverse reaction the opposite way and vice versa. right? Just look at some of your stocks like Palantir or GameStop that has gone up super abruptly in the past, or anything like that, right? Those stocks had a hard come down. This one right here, right, we're very, very low. We're very, very underextended from the 50 moving average on the weekly, which leads me to think that maybe we can see some bounce maybe up into this area. One thing to note, the trend has changed, everybody. It's pretty obvious, right? We have a low over here, we have a high, and then we just made a lower low. So the question becomes is, where do we make our lower high? Not really too sure. We can kind of use fibs to maybe get a little bit of an understanding of where we could bounce. We're currently right underneath our 23.6% level, which is around 565. So 565 is our resistance currently. We can't get it past that right now, where we close right underneath it. Maybe we go past it next week. I'm not too sure. I do think if we do see a good bounce, it is very, very possible. And then we can maybe see these levels over here, 588 and 581. Probably we'll see a lot of selling taking place up here, aka sell the rally. Just like buy the dip, right? When markets go down, sellers in the stock market, they sell the rally. So I will be watching those levels moving forward. If we do not get a firm retracement, if we do not hold this area down here of 549 or aka 550, we can definitely see lower. I would be surprised to see lower, to be honest. I think that would indicate an extremely bearish market just because of this trend line here. That's the only reason why I can maybe see us have some resistance right around here and then come back down even further. That would be the worst case scenario right now, right there for I think a lot of people. I don't think that's going to happen, but it could. I'm not sure. I'm not long on anything right now on SPY. This week I was selling bull put spreads. I was selling insurance to people who thought the market was going to go to like 530 and 520 this week. So these are my fills from the past few days. I was selling a lot of vertical spreads, mainly, honestly. So selling just a lot of credit, receiving a lot of credit for some of these vertical spreads. You can see that I was using puts for the most part, right? I'm selling put credit spreads. And the reason why I was doing that is because I didn't think the market would go any lower, at least this week. So basically with the high increase in implied volatility, I was like, hey, let me just sell some premium just to people who think it's going to go lower. So I was able to buy back a lot of these spreads. I did not hold any for straight max profit. I closed many of them. I like 50% max profit. As you can see, these debits over here. These are all my closing orders. They're all lower prices for the most part. From the credit I received. So it was a decent, profitable, small week. One thing to mention is the price of gold. Price of gold has been skyrocketing, as you can see right here. I'll move this. You can see price of gold has been increasing. It's usually a safe haven for a lot of investors as inflation concerns increase. One of my good students has brought up this stock to me, which is NGD, which is New Gold. It's a company based, I think, in Canada, and they also have been doing very, very well because of their gold endeavors as well. There is a resistance at 332 currently on gold. So if the price of gold does come down, that means the market could maybe potentially go up. They're kind of having an inverse relationship right now a little bit. But if we see the price of gold move upwards even more, that could indicate some more sell-off from the S&P 500 and other stocks. Again, I am not super bearish, but I'm also not bullish either. I would like to see a fair bounce. I would like to see us come back to kind of the 588, 581 levels. And if we go there, I probably will be short, to be quite honest with everybody, at least for the time being, until we reverse the trend, right? Until we start going close to 613 again, right? We're a long way from there. Also, guys, if we really zoom out, I know this is only the daily 50-day moving average. Remember, this is the mean right here. Trends like to revert back to the mean. If we look at a monthly chart, everyone, we're very, very still overextended from our mean, right? And if you look at the S&P 500, we've always kind of reverted back to it, right? This was COVID. This was 2022. This was another time. This was 2018. This was another time. I don't remember. I wasn't trading back then. Right here, right? Right here, right? This blue line is our mean. So we're very, very overextended. So at the same time, it should not surprise any of us if we do go lower. We are in somewhat of a bubble, potentially. So looking at this also, all right, we do have some gaps I know many of you have been watching. I'm always a big advocate of gap fills and how a SPY likes to fill gaps. And we did fill all these gaps up here, right? We filled all these gaps here, right here. And those are probably the two main ones, right? I think this gap right here was the main one that I was talking about probably like, a few months ago, a few weeks ago. And we ended up filling that one. We also have gaps that are very, very down here too. Right around 440. Not saying we're going to go down that far. I'm not saying that at all. But we have some gaps here that we have never filled before. So just stay solvent because there's a lot that can happen. Tariffs can increase the price of goods, and we might see further inflation. Tariffs have the ability to increase inflation because businesses are going to incur higher costs, and someone's going to have to pay for that. Prices will increase. At the same time, consumer sentiment is not looking good. Everyone's kind of concerned right now, or respectfully, as they should probably be a little bit in the short term. And if they're more concerned, they might go to their employers, ask for more wage increases, saying, hey, pay me more, right? And that's going to fuel the inflation spiral, because if employers have to pay their workers more, then they're going to have to raise prices. And if they need to cut costs to limit the impact from the tariffs, then they are going to potentially lay off workers even as well. That could lead to decreased growth. So the Fed's going to they're coming into a crossroad very, very soon. That's what the picture's painting toward, of slower growth in the economy potentially, with hiring freezes, more layoffs, immigration policies. They're moving out, immigration. Trump's very big on that. We've lost a lot of key members of our workforce. That's going to hurt some growth right there. And I think the goal is for Trump he wants the Fed to lower rates probably. And, that could prompt the Fed to lower rates, but how are they going to lower rates if inflation is there too? And inflation expectations have increased. That can fuel into consumers' heads and be like, no, I don't want to go spend money. And because inflation is going to pile up, whatever the case may be. And it's just it's a lose-lose kind of scenario. It's what they call stagflation. If we are heading into a recession, it probably will be pretty evident very soon in stock prices. We can see one thing I'm watching as well on technicals is the death cross. So right here we have our 50 moving average and we have our 200 moving average right here. Don't want to see these cross. What I mean by that is I don't want to see the 50 moving average go like this, and I don't want to see the 200 moving average go like this. They would cross each other like that. This happened in 2022 over here. We had our death cross right here. And then what did we see beyond that, right? We had our recession. So, and then we had our golden cross, and then equity started moving up again, right? AI advancements and all that good stuff. And, I'm not really particularly worried right now. I'm not extremely bearish, but just stay solvent. We'll see what happens. One last thing before I head out here is the Fibonacci's on the broader time frame. So, again, the only reason why I was selling bull put spreads this week was because of our Fibonacci's. So this is the low of 2022, and this is the high of 2025. So when I draw the Fibonacci retracements, these are great tools for finding out where the stock could potentially decline toward. As we've seen right here, we declined to 550, 66, our key 23.6% level. How beautiful is that? And we're seeing a little bit of a bounce here as well. So yeah, we'll see if 550 holds. 550 is going to be the key level. 550. If we move below 550, I think we can see 511. And if we move below 511, I think we can see 480. I wouldn't be surprised to see 480 either. No, I'm not really a bear. I'm just prepared for the worst case scenario. If not, then market will continue to go up, and I think everybody will be happy. But markets go up and markets go down. Things revert back to the mean. It happens, everyone. So, hope everybody has a fantastic weekend. This is my quick SPY update on what's going on. Overall, the mood's just a little gloomy overall. So stay tuned for more, and thank you for watching.